and it shows you what this is all about and why bonds are not worth the paper they're printed on, nor the electronic entry they're put into at Euroclear. Thursday, June 20th, 2024, Monaco 64, home of alternative economics and contrarian views. Yes, you probably have heard of The Great Taking by David Rogers Webb. I've spoken about his theory that in a deflationary collapse, the custodians, the big banks, the government would take all your assets. Yes, that's a possibility, but today we're going to talk about another great taking, and that's Janet Yellen's great taking. Yes, the Secretary of the U.S. Treasury, she just, told the world that she can take whatever she wants from whoever invests in U.S. Treasuries or any government bonds for that matter. But before we look into that, I just wanted to give a shout out to one of my affiliates, the Dirty Men Safe. Yes, in this day and age when the U.S. Treasury Secretary can take whatever she wants, I think we need to look after our valuables. And the Dirty Men Safe is a way of keeping maybe your gold and silver or even your crypto hard wallet, if you're into that, safe in a hidden place. So if you want to find out more about the Dirty Men Safe and how to get one, check the link below in the description of this video. You'll get a 10% discount by clicking on that link. And I think they're still sending a gift if you get a Dirty Man Safe. And they have different kinds, of course. So back to Janet Yellen. What I'm going to do is play you the clip right now of what she said last week. I think it was on ABC. So listen to this.
Well, there is no sense at all in which it's theft. The Russian assets remain in this institution. They've been impounded. The investments that Russia had have matured, so Russia's funds are sitting in cash, but they're generating income for the institution, which Russia has no claim on. So there's no legal issue here.
So what did she really mean, Russia's assets, and that they've matured and the cash that it's generating is not theirs anymore? They have no right to it. So there's a problem already with that way of thinking, with what she said there. It doesn't make sense because the assets Janet Yellen is talking about are bonds. And if bonds mature, they don't generate any cash or any income anymore. So which one is it, Janet? It's amazing. And I'm going to show you now an old-fashioned bond that was actually paper, as you can see. And I'm going to explain to you how a bond works. A bond, of course, is just you lending money to someone else in a securitized manner. And by that, I mean that those bonds can be traded in the market. It's not just a one-off loan, and other people can buy it from you. You can sell it in the secondary market. And I think this will help you understand what Janet Yellen has just done. And we're going to look at the repercussions this is already having, not just for the U.S. Treasury market, but for the fact that more and more countries, not just emerging markets or global South countries, but the rich Western countries are looking to get rid of treasuries and buy gold. Yes, you heard that right. But what have I got here? Well, it's a German government international 5.5% loan, 1930. So It's a German government bond issued in June of 1930. And 1930, that's an interesting date, isn't it? That was the year the Bank for International Settlements was created to settle German war reparations for World War I. And this is part of this. So they issued quite a bit of these bonds. So it's $1,000, this one. So you could have gone to JP Morgan office in Manhattan, as you can see here, and bought one of those, or maybe bought it through your broker, more likely through your broker. So what did you do? Well, you paid $1,000 and you received this. And the interesting thing about a real paper bond, and nowadays everything is electronic. So Mr. Putin and the Russian finance minister, they're not sitting there with paper. Everything is at this institution that we're going to come to in a minute that Janet Yellen talks about. Very interesting institution. It's called Euroclear. And I worked in the bond markets. That's where I started my career. And yes, we did a lot of stuff. Euroclear, they cleared all the trades, and counterparties kept their assets at Euroclear. There's also another one called Sedel. But anyway, what I wanted to show you as well is the coupons. So what's a coupon? Well, it says here that you pay $1,000 to get this bond. So you lend $1,000 to the German government. And for 35 years, because these bonds mature on June 1st, 1965. So for 35 years, you're going to get every 6 months $27.50, because it's a semi-annual coupon. And if you work that out over 35 years, that's a total of $1,925 that you're going to get over 35 years from a $1,000 investment. And in June of 1965, you're also supposed to get the principal, which is the $1,000. So you will have gotten back through time and on maturity of this bond, $2,925. But the interesting thing is that here you've got the coupons, and they were clipped from 1930 until May 1945. As you can see here, the coupons are still here. This is for June 1945. And why did the clipping stop? Well, it's all to do with the war. On May 7th, 1945, Germany unconditionally surrendered. So isn't it ironic that up until that date, you could still go and clip your coupons and get your $27.50 every 6 months. And then Germany loses the war. And yeah, the US government and JP Morgan, and also the First National Bank of the city of New York, or Citibank, they default on it. So you're screwed. Well, and you were screwed also in 1933, because you're supposed to be paid in gold, because it says 5.5% gold bond, as you can see here. So what I want to do now is read through, not the whole thing. They've got it in English, in German, and in French, as you can see. I'm going to read the English part, of course, and it shows you what this is all about, and why bonds are not worth the paper they're printed on, nor the electronic entry they're put into at Euroclear. So I'm going to take my glasses off. It's going to be easier. Okay, German government international 5.5% loan 1930, 5.5% gold bonds, total issue in United States of America, 98,250,000. And you can bet Citibank or First National City Bank of New York and JP Morgan got a hefty commission from that. It says the German Reich, hereinafter termed the obliger for value received, hereby promises to pay on the first day of June 1965 to the bearer of this bond the principal sum of $1,000. So you can have a look here. So I'm going to continue here. And to pay semi-annually on the first day of June and the first day of December in each year until such principal sum shall have been paid interest thereon at the rate of 5.5% per annum in accordance with the coupons for such interest hereto attached. Upon presentation and surrender of such coupons as severally they become payable, such principal sum and such interest will be paid in the City of New York, State of New York, United States of America, at the office of JP Morgan and Co. So you can see who defaulted there. In the borough of Manhattan, in the said City of New York, in gold coin of the United States of America, of the standard weight and fineness existing on June 1st, 1930, without deduction for all present or future German taxes, stamp or other duties, dues, or public charges of any kind whatsoever, and neither shall this bond nor any other document or letter bearing upon said loan be subject to any German registration fee. So anyway, so the war ended in May 1945, and up until then, you could go and get your coupon, clip your coupon every 6 months, but Germany loses and they default. And worst of all is that in 1933, FDR signed Executive Order 6102 and made gold illegal. So after 1933, these coupons were paid not in gold coin, but they were paid in dollar bills, which are not really money, right? You can't really extinguish those. And that's why I say, bonds in the fiat currency world, they're not worth the paper they're printed on. So this is what Janet Yellen has done now. She said that the Russians, they can get the $1,000. Well, it's frozen at the moment. But all these coupons, they don't have any right to them, and they can just take it. The institution, Euroclear, can take it and give it to whoever they want, Ukraine or Israel or Taiwan, right? So Euroclear is an interesting institution because guess who founded Euroclear? Well, our good friends at JP Morgan back in the 60s, late 60s. It's a European institution. Why was it founded by JP Morgan? Well, because the Eurobond market was growing in Europe. All the dollars that were abroad because of the trade deficits that America was running, they were traded and they were lent through bonds. Eventually, though, JP Morgan sold off its interest in Euroclear, but it's become an institution that's held by dozens of banks, including JP Morgan. So the people who are going to benefit from this theft by Janet Yellen and the Europeans are going to be the banks because, it's going to go onto their balance sheets. And that's why we've got the problem of liquidity in U.S. Treasuries. And Tavi Costa talked about this And he said that U.S. Treasuries are the most illiquid since the European sovereign debt crisis. And what does that mean? Well, that means that the spread between the bid and offer is the widest it's been. U.S. Treasuries are supposed to be the most liquid assets out there, but I would venture to say gold is going to become, and it's already becoming, the most liquid asset. This is just the difference between the bid and offer, and that's very serious, and I think that's going to continue to get worse, and that's why I think holding bonds is very dangerous. If they can do that to a sovereign nation like Russia, they can do that to everyone, and that's why I said it was Janet Yellen's great taking. And this is the other reason why even the FT of all publications are noticing now that rich countries are also planning to buy more gold despite record prices. As you can see here, this is an article from a couple of days ago, June 18th. And the interesting thing is, towards the end of the article, this is what it says. The dollar's share of global foreign exchange reserves, excluding gold, has plummeted from more than 70% in 2000 to about 55% last year. Stripping out the effect of US dollar appreciation, according to research from the IMF this month, including gold, though, the dollar share has dropped below half, the World Gold Council says, and I think it's going to continue to drop. And why is that? Well, because not only the global South countries are going to be buying more gold, but also the rich countries now are looking into gold. And it says here as well, this is something we've been warning people for about 2 years, and finally the FT's talking about it. It says the demand for gold, which comes despite a sharp rise in the price of the yellow metal this year, highlights how allocations to the dollar have been declining as central banks have sought to diversify their holdings through alternative currencies and assets, especially after the U.S. weaponized its currency in sanctions against Russia. So there you go. This is the other thing the FT says. Central banks added more than 1,000 tons of gold to their reserves in both 2022 and 2023, according to the World Gold Council. U.S. sanctions and Russia's dollar-denominated assets prompted a rush among non-Western official financial institutions for bullion, the value of which does not rely on any government or bank, unlike fiat currencies. Yellen? Not worth the paper it's printed on, people. And I saw yesterday in one of the publications here in the UK that savers should lock in their savings because interest rates are going to start falling because inflation is under control. Well, what do they mean by that? Well, they mean buying more bonds, gilts. Beware. My money would be on gold, but not through bonds, physical gold and silver as well. So there you go. Crazy world, and it's going to get more and more crazy. And hopefully you will have prepared, not just spiritually and within your community, but also financially through having a little bit of your savings or your wealth outside this corrupt system where they can just steal your investments, just like Janet Yellen said. It's crazy. And she's saying this at a time where the U.S. Treasury needs to borrow almost $10 trillion, not just to roll over old debt, but also to cover a deficit that's going to approach $2 trillion in the current fiscal year. So there you go. Let's quickly look at the markets then this morning. It's 8:17 a.m. London time. For a change, gold and silver have picked up overnight. Gold is at 23.43. It's up about 15 bucks. The high's been 46 and the low 22. Silver is back above $30. That's not surprising because the Shanghai Futures Exchange silver price is trading well above 30. I think yesterday it settled almost at 33. So right now, silver is at 30.35, up 60 cents or 2%. It has been as high as 30.50 and as low as 29.71. The Dow futures is up 80. NASDAQ is 100 futures is up above 20,000 now. It's up 95 points. And the S&P is up 15 points. So the melt up continues here. What about the currencies? Well, the pound's unchanged, 127.13. The euro is down slightly, 107.37. Dollar's back above 158 versus the yen at 158.16. Let's check out some of the other currencies that I haven't checked of late. The old Aussie dollar, that's up, actually the Aussie dollar is unchanged, 66.70, and the dollar is unchanged versus the Canadian dollar, 137.08. What about commodities? General commodities, non-monetary commodities. Well, WTI crude is at 80.62. It's unchanged. Brent is also unchanged at 84.62. And to finish off, high-grade copper is up 0.5% at $4.50. And with that, I'm going to wish you all a great day. Take care. Bye.